Hello everyone, Clifford Bennett, Chief Economist at ACY Securities, and the Chinese economy continues to slow to such a degree that today the People's Bank of China had to cut the one-year midterm lending rate down to 2.5%. That's just a 15-point cut, but we're getting into low territory now and still going in the opposite direction, of course, to the Western economies, but only because the Western economies have such severe inflation problems. China doesn't have that problem, but it does have a slowing economy, and we've all seen the headlines about the property market of late, and we've been discussing that for many months, as has the whole world, so it's not really a surprise. In terms of other data today out of China, retail sales really worried me. It was down to just 2.5% on the yearly basis for July, but the monthly number was a bare 0.2%. This is not the China of old, which is what we forecast would be the case. So the Chinese economy, the consumer, is still retreating to some degree. And I guess that helps feed into People's Bank of China cutting rates today. That will help support the economy toward a soft landing. The Chinese economy could be viewed as being in a glide path at the moment with one engine running, but the only challenge is that the airport is not yet in sight. So it is way too early to be talking about a soft landing for the Chinese economy. I do think it will happen, but it's somewhere way off in the distance there. So that's not happening anytime soon. Industrial output slowed also from 4.4 to 3.7%. And so across the board, fixed investment slowed to 3.4%. Across the board, continuingly slowing data for China. The little bright spot out of Asia today was in Japan, where GDP was up an impressive 1.5% for Q2, but that was Q2 and it included a lot of strong exports, whereas the more recent data out of China suggests that global demand could be dropping, therefore that export boost may not continue into Q3, Q4 as much as it really did contribute to Q2 data. In Australia, we saw wages growth of 3.6%. That's just edging back a little bit from 3.7%. It's really the same sort of number, and it's 50% higher than even in a firm wages growth period historically for Australia. So it is a breakneck speed of wages growth in Australia, which will certainly have the RBA raising an eyebrow or two. So that tightening bias by the RBA and even a risk of another hike from the RBA is still very much on the table. Not what people want to hear, but that's the nature of the beast at the moment. In Australia, the reaction to that data was sort of up and down, a little bit muted, a little bit volatile. It's probably a mini run of what we may expect for retail sales in the US tonight. Retail sales will be the big data point. Really, it's not as important as all the Chinese data we saw, but I guess everyone already knew China was slowing. But today's data does say that there's a lot more slowing to come, I would suggest, for the Chinese economy. The retail sales data in the US is expected by the market to be up a whopping 0.4%. And that is a firm to strong retail sales number for the US series. It is, however, probably moving in the right direction, given that the last outcome was so weak. So we've had, 2 months ago, 0.5%, then 0.2%, a sharp drop in retail sales. But July had a lot of sales, a lot of merchandising, a lot of advertising effort to generate sales. And also it was a better seasonal sort of period for travel and generally being out and about. So it is reasonable to expect that US retail sales will look good on the night. It may, however, be the last of a good number. I'm always like sort of putting a wet towel over things, but that is the case. And I do think we've just seen, Wall Street Journal reporting that homelessness is up 11% over the last year. And so there's things going wrong in the US economy that aren't always seen in the economic data, is what I'm suggesting. And yes, there is a separation of the economy. I've said some time ago that the economy was fracturing into two different economies. And the unfortunate tragedy is that the lower half, or whatever proportion that may be, continues to struggle. The middle class in the United States is shrinking rapidly. So it really is a wealth gap acceleration that is unkind. I don't mind wealth gap acceleration if the poor are getting richer too, but just at a slower pace. But when the rich are getting richer and the poor are getting poorer, that creates a lot of tensions within any society or economy. And I do think we need to keep an eye on that side of things when we're looking at the prosperous, semi-prosperous, momentarily prosperous retail sales data of the United States tonight. Markets, equity markets trying to stabilize, very, very big effort here by the US equity market to stabilize after those sell-offs of recent weeks and again build towards breaking higher. You can see that in the nature of the price action, but it is also in anticipation yesterday and today of what should be a good retail sales number. The risk is, of course, that the retail sales number disappoints. I don't think 0.3 will be a worry, but if retail sales came in again at 0.2 or 0.1, which I don't think will happen, but it's worth thinking about in advance just in case it does, because you don't want to be trying to figure everything out in real time. You want to have considered different scenarios before they actually unfold. So when they do, you're acting in real time faster than anyone else. So I would suggest just, run a playbook on what if retail sales come in at 0.2, 0.1 in the US. I think what you'd see is markets breaking lower, and just that range break lower could create a snowballing avalanche effect to keep equity markets moving down for a considerable period. So be aware of that. The central theme, though, is that it should be a good retail sales number in the United States tonight. The market seems to have weathered the Chinese data, although with a little bit more comprehension over the next 24, 48 hours, I think that Chinese data could become more worrisome than it has first appeared to global investors. Thanks very much. I hope you have a good day. Clifford Bennett.